TGIF, everybody. Everyone doing okay? I'm glad it's Friday. So just starting off with sometimes your first idea is your best idea. On Monday, I pointed out that here in the Dixie, we were 78.6 back of this right here. So was expecting a bounce. The magnitude surprised me. Okay. Blake will be with us in a minute. He's coming on now. Okay, Blake, go ahead. Anyway, we're at another 78.6 level here. So you would think it's a layup to take out this double top here. You would think so. But as choppy as everything's been, this might be a great shorting opportunity with stops where everyone else's are above the high, 95.5. Normally don't establish new positions on a Friday, but I think that's a possibility because just looking at the euro, dollar index is stronger than the euro is weak. I don't think we have 78.6 back here. So I think my gut tells me there's still one more pop left in the euro here. So let me do this. Okay. Everyone with me on that so far? I mean, it looks like a layup that the dollar is going to make a new high. I don't know why it's doing this. Oh, I see. It's because it's over here. Get rid of it there. And now I don't have it here. Well, anyway. Okay, maybe it works now. I don't know what's going on with my mouse. All of this stuff.
Oh, what you got going on over there, Dale?
I have my Etch-a-Sketch.
Apparently.
Here. Anyway, Blake, you know. It
does.
Do you think we're more than 61.8 back on the euro from the recent rally high? Pull up the fibs for me because the Dixie's 78.
We're sitting there at the 618 actually.
Okay, so that's what I was trying to show with my Etch-a-Sketch here, but now I got it. What do you want for a dinosaur? Okay, so here we are, right there.
There you
okay.
go.
All right, so I mean, you would think it'd be a layup for euro to make new lows from here, but I don't know. To me, it feels like there's just Grega was on, said there's one more week left with the cycle work he was doing, also applying that to his wave count. And I know he's bearish, but I kind of think there's one more wave up, and I think it's going to take that for the S&Ps to get up towards 28.20 or so. And then the dollar possibly turns and heads up with the market peaking, but Dixie looks like it could still pull back here. 78.6 worked here, and maybe 78.6 is going to work here. I remember we had a gal with us who, and even Lydia, who, people that specialize in certain pairs and stuff, they know each instrument kind of has a favorite or really resonates with certain fibs. Maybe 78.6 is it in the dollar index. So here we are. I wouldn't be long the dollar here. So that's the way it looked. I think gold's making new lows, and I think it didn't confirm this time. So taking a quick look at the gold here. We're right there. Okay, so we took out the lows. And this time we're not confirming. That's a 4 hour. Even the 1 hour. starting to diverge and getting a reversal day. You know, maybe we're going to have one of these big Fridays out of nowhere. I mean, we don't have big news today, do we, buddy?
No, we don't.
Okay. So anyway, you're getting a reversal in gold. The dollar is stopped at 78.6 back. I'd go with these things, and normally I don't like to do anything on Friday, but I think there's a possibility for this gold rally now. And, you know, everyone's going to say we're breaking down out of that major trend line, but I'm getting some nice divergences here. So I like the long side of metals and the short side of the dollar from today's low in gold and today's high in the dollar and low in the euro. So that's the way it looks to me going home over the weekend, which I'm grateful for. And you, Blake, great work in Canada this week, and it was a pip. And don't you love it when a plan comes together, because you were talking about it on the week ahead video?
Yeah, you know, I mean, I'm still well, I still have the pattern in play for the dollar Canadian working. I did take off my entire position at 132, but that doesn't mean I don't think it's going higher. So, you know, I left the pattern in play on. So let's talk about that for a moment.
Okay.
Actually, I think that's kind of
I think it's, you know, really an important point, that something that, you know, you planned ahead of time, you know, and it's set up. You have that spike on the interest rate news on Wednesday. I'm not sure how you handled that spike, that big day.
Yeah.
But you were, you know, you knew what you wanted to do Sunday for Wednesday.
Yeah, and that's that's the that was the key to what I was doing this week is planning this particular trade out, and buying it here. And let's make sure that we clarify that it wasn't all roses this week either, because I did I was short the dollar yen. I was short the dollar yen up here, you know, from a week and a half ago, and I mean, literally I was short where it says D here on my ABCD. I was short at, like, you know, 110, I want to say 110.92 was my average, and I got stopped out at, you know, 111 like 50 something. So and it wasn't a huge position. I mean, I actually made pretty good money this week because my.
So what's the expression? It's okay to be wrong, just not to stay wrong.
Yeah, so, that's yeah, actually that's a great saying. That's like one of my favorite sayings. Yeah, it's okay to be wrong, just don't stay wrong. And
I
that
made
brings,
it up.
No, you didn't. I wish you made it up. That saying's been around a lot longer than you and I.
I think I've made everything up, man.
Yeah. Okay. But as far as the Canadian goes, I still think we're going higher. I think we're actually going a lot higher than where we're currently at. And I just took my position off at 132. So my full position, I was riding it from 130, 130, 70, 130. Yeah, my cost average after yesterday's edition, because I
How do I remember your entry? How come I remember your entry?
I don't know. It's pretty good, but you don't remember who says certain things. That's created it all. Anyway, no, and I picked up more yesterday, so I brought up my average a little bit. It was like 130. Since my averages don't average every day. It's not. I don't have a retail system. I'm mark to market every day, so I have to kind of remember where my averages are. You know, if I buy something like when we spiked down here, my long was below 131. But I reset every day. So every day I have to reestablish my positions, because I mark to market every day. My P&L goes back to zero. And it doesn't matter if I bought it here. If we close up here, then that's where my price is. That's where my current average is. So I have to kind of keep it in my head where I'm long. That's the difference between trading in, I guess, the institutional platform versus you trade a retail platform where you're like, oh, I shorted the dollar Canadian up here at 133.50 and I have this one position up here. Yeah, that doesn't matter today. Today, today it's where are you at today, where versus where we mark to market. So everything I do is mark to market. So that's why when I sound a little like when I sound a little wobbly on where I'm long, it's because I have to do it in my head. Like, okay, yeah, I bought 2/3 of my position down here. I bought another third up here. And I was in a full-size position. I sold it all here, so my cost average is probably around 131.10 or something. So anyway, to make a long story short, I actually sold everything this morning at 132. I still feel that we're going higher. I do feel that we're doing this eventually. I just, being that it's Friday, and we don't have any data that you pointed out. We may slump back to 131.50 before and allow me another place to get long. So I'm out of that position for right now. But you'll notice if you use ForexAnalytix, I still have a pattern in play on, because
right.
The reason why this pattern in play is there is more of a textbook. I wanted to buy it at the confluence of supports down here between 130.50 and 131 and 130.85, and I'm still targeting 134 overall. And
what's that 134 based upon? Some type of measured move or objective?
Recent highs.
Okay.
So and I can adjust those, because I actually think it could go up to back to 136, but I have to kind of figure that out as we get up there. I just think that you play it on this long-term trend line, knowing that we backed up to support. We're going, in my opinion, we're going up here somewhere. But I put in a limit at 134 initially, and those can be changed and adjusted. But I just want everybody to understand that even though that this pattern in play is here, that doesn't necessarily mean that I'm always going to be long. I mean, I've played this thing long this week, from Wednesday to today. I made really good money, but I'm going to try to look to reload if I can,
or for them for that matter. Blake,
what do you mean?
Our subscribers, they don't have to hold it till 34.
Oh, no,
they want to trade it just like you. It's a map. It's a roadmap.
That's exactly what these are. You shouldn't use these as a holy grail. This is where he's buying, this is where he's selling. I mean, no, I'm looking. This is more of, that's exactly it. More like a map. Like, okay, Blake's got a bullish bias in the dollar Canadian up to 134, so I'm going to try to buy it. Play it on the long side until then. That's and that's the way it should be interpreted. If you guys use ForexAnalytix, you're also in the chat room, and so in the chat room, you can see right here.
People are trading it. In other words, the pattern and play are not engraved in cement tablets like the 10 Commandments.
Yeah, like here, like this is 45 minutes ago. Out all U.S. dollar Canadian longs, reloading back at 130.50, 131.50, 131.60. So you can read, kind of what this is how I feel about the positions. Intraday, and it may be a little bit different than what you see here, because I'm actually trading the Canadian versus being an investor. But there are times that I will get into a position in the market and sit in it too. It depends on what's going on. I mean, look, if I bought the dollar Canadian because Donald Trump ripped up NAFTA and ripped up the NAFTA agreement, and I would be probably staying in the dollar Canadian looking for 138, and I would not exit my position. So it just really depends, what's happening at that moment. Like right now, I know it's Friday, and I know we've got really key resistance here at 132.20. I already know the dollar is bouncing, or the dollar's pulling back. You can see the pound is, just rallied, 30 pips off the lows. The euro is bouncing a little bit too. It's Friday. I mean, you're gonna get some position squaring, and yeah, I wouldn't be surprised to see the dollar Canadian back at 131.70, this morning. So what I want you guys to understand is how to use the ForexAnalytix platform and the patterns in play. I think that Dale said it perfect. These are like roadmaps, not necessarily the holy grail. Now, I also want to talk about, just because it's summer, and I want to talk about, I'm not going to point out any traders in particular, because I don't want to make anybody feel bad. If you fit this, you don't fit. If you fit this bill, then so be it. But I wanted to talk about the summer months in trading. Look, I tend to be a little bit more active in the summer as far as in and out of positions more. Not necessarily like I'm scalping or I'm trading more. I tend to take profits a little faster, and I tend to not stick around in my trades too long if they're going against me, because in the summertime there's not a lot of volatility. So if you get in a position, okay, let's talk about this for a second. Let's say, and today is not the day, because we did see some volatility today because of the comments that came from Donald Trump overnight, which created a lot of volatility, which we can talk about. But typically, and what we've been seeing is we've been seeing less than 50 pip trading ranges in most of these majors. So, if you're talking about the euro or the Aussie or the Kiwi or the Canadian, I mean, we're lucky if we can squeeze out a 40 or 50 pip intraday trading range. So if you get into a position and you lose, let's say 50 pips in a trade, my question to you is, how do you expect to make that back? All right, because I was sitting there watching. The dollar yen was a great example. The dollar yen broke out on Thursday. I got stopped out. I actually turned around and got long, or it was Wednesday. I actually turned around and got long Wednesday night and bought and made like 30 pips in Asian trade. In the dollar yen, but I saw a lot of people that were selling the dollar yen short, and they just stayed in the trade. And I'm like, okay, so the next day you're down 50 pips. It's like, how do you expect to make back that 50 pips in a market that tends to, when I say a market, it's the summer months, we tend to have 40 or 50 pip trading range. The breakouts are hard to find, and they're kind of rare. So when it happens, you either need to be on board and ride it out, or get out of the way, because if you get stuck on the wrong side, of a trade that's moving aggressively in the summer, the chances of you being able to recoup those losses in one trade in the summertime is going to be very difficult to do. So the adage that Dale just said about it's okay to be wrong, just don't stay wrong, is so true in the summertime. You got to cut your losses short quickly in the summer, and I'm quick to take profits too. If I see a decent profit, I'm going to take it off the table, and I'm just not going to stick around very long. So anyway, with that being said, hold on one second. Hey Dale, are you there?
Yes, I'm back, buddy. Yes.
Okay, hold on. Sorry, just writing back to somebody. Anyway, I've got to pass the webinar over to my colleagues. I think Steve and Stelios are both here. Good morning, guys.
Good morning, Blake.
Hello, good morning.
Hey guys, I'm sorry, I've got to jump on a meeting real quick, and I'm out of position. So, how you guys doing?
I think we're fine. Yeah.
So, Steve, I hear you're getting baptized this weekend.
Yeah, right. Absolutely.
Here's the thing, Steve. You can't deny that you have been baptized. You're Greek. Every Greek gets baptized. I think it's like you get baptized before you come out of the womb.
I got baptized in 1981, so it's been some years. Unfortunately, nobody asked me because I was 12 months old.
well, you know, that's funny. I don't think anybody has a choice in Greece, really.
More or less.
More or less,
well, good.
right?
Good, Steve. Even though you don't believe, you're protected, so you get the bonus. All right.
So
your parents made a good choice.
It's some kind of a spiritual hedge, Dale.
Yeah.
So guys and gals, if you're at home and you're listening in, you're probably wondering, you know, what the heck we're talking about. Yeah, Steve's godfather to a child this weekend, right?
Yeah, the third one.
And he's gonna miss the World Cup final. Ha ha, mate.
Yeah, I hate you. Thank you for reminding me.
Is it really on Sunday?
Yep.
Yes, I hate them that much. They obviously did it on purpose. It's really on Sunday, taking place actually like when the second half of the game is going to be played.
Oh my Lord!
What time is the game on Sunday?
Well, for us, Dale, it's at 11 in the morning. So
that's a good time. Yeah, all right.
Exactly.
It's like at 8 o'clock at night, right, or something like that. There.
Local time, 7 o'clock in the afternoon.
You call that afternoon? That's about my bedtime. Interesting. Okay. Hey, I'm gonna let you guys take over. I'm sorry, I got to jump on a meeting. I love Friday meetings, but hey, I wanted to also say, guys and gals, if you haven't visited Forest Park FX, make sure you do so. They are our sponsor of the FACE webinar. They are they'll help you find any broker that you're looking to work with, because you know, I've been in the situation where I'm just not happy with my current broker situation, and they'll just help you find a firm that is in line with what you're looking for. So, and then also if you use ForexAnalytix and you don't live in the United States, so you live in Europe or Asia or somewhere else, you know, you can also get it in our reimbursement program, which will help you compensate to be a ForexAnalytix subscriber while, you know, finding a broker that works for you. So Steve's got all the information up there. If you scroll to the bottom of that page, it's right on our website. You can contact them directly through the contact information. Well. So yeah,
it's also guys, Friday sign-up day for new subscribers. Just in case the people that know, it's Friday sign-up day, because that's my favorite day of the week for people to sign up that are new, because they have the whole weekend to get used to it, so they're ready for action next week.
Awesome. Well, good point, Dale. We're going to make that new client Friday. All right, guys. Hey, have a great weekend, everybody, and good luck today. I'm pretty much... you know, I don't know if I'm going to be doing a whole lot today. Friday on a summer, still World Cup week, whether you like it or not.
Yeah, go do a little gardening out there this weekend, Blake.
All right, we'll do.
You still have time to fly here and take care of a baptism on Sunday, Blake.
No, I'm good.
If you're up for it.
You guys
I can watch the World Cup final.
Bye, guys.
Bye-bye, mate.
Steve, do you know as a godfather, you're responsible for the kid if anything happens to their parents?
Yeah, that's why I'm going to be taking care of them very, very well. I'll make sure nothing happens to them.
Just wanted you to be aware of it. That's all, bro. All right.
Yeah.
Steve, before you start, I wanted just to mention something. Most people probably saw the headlines on Trump in May, whereby Donald Trump, you know, said he had this visit to the UK, and among other things, he said that if May proceeds, Sorry? Yeah, if May proceeds with this version of her Brexit, then it will ruin any kind of chance for a trade deal between the US and the UK. Markets sold off on that. Sterling got hit a little bit, not a lot, but a little bit. And then I started to think about it, and the way, some things don't make much sense to me, because the way things are at the moment, the UK is either going to lean towards the US or towards the EU. At the moment, May wants to have this deal with the EU. Now, whether the EU accepts it or not is a different question. But look at what the UK exports. And in 2017, the UK exported roughly $60 billion of stuff, products and services to the US. So 60 billion. To the EU, it's more like 170 plus. So if you have a choice, if you have a choice, you're going to side with the EU, and also, geographically, it's closer. It makes sense in many ways.
Plus the way the president is treating them.
Yeah. Plus, once again, I don't actually understand this kind of an approach. I mean, why is it in the best interest of the US to, in essence, blackmail for a choice? I mean, why can't the UK have both a good trading relationship with the EU and with the US? It makes absolutely no sense.
They should be mutually exclusive, and I don't get that. I don't get that strategy.
Exactly.
Either does the UK.
Yeah, but it makes no sense for anybody. I mean, honestly, it makes no sense. I mean, ideally, you would want the UK to have, good trading relationship with, any party, everybody, if possible. Yeah. I mean, so it really doesn't make any sense.
If you have to choose 100 times, you'll choose the EU and not the US. So anyway, that kind of, I was looking at it and reading it and looking at the market reaction. I was thinking, no, I don't understand this, why it's doing that. But anyway, I guess there's a lot of algos who read the headlines and they straight away, they put trades on. So, and it kind of creates a little bit of a snowball effect. But again, I don't understand it that much. But
regardless, the cable has pared back already like 2/3 of the losses so far. Of course, we need to see how this is going to end up, but half of the loss, let's say, Yeah, so,
and cable is actually now performing similarly to euro-dollar. So basically, the dollar is strengthening, but cable is not, sterling is not underperforming as much as this morning. So that kind of makes sense now.
Yeah, and let's not forget that Trump also opened up with, what was it, yesterday, that he actually said that British people are not getting the Brexit they voted for.
Yeah, well, that's a good point, and actually probably true, because they voted for to cut the ties with the EU, and it looks like May wants to push something which is kind of a semi solution. So yes, that's a different story.
That doesn't change the fact that usually, as a foreign leader, you have absolutely no reason to get involved with internal politics, right? Because this is definitely a subject that isn't affecting the U.S. or the U.S. should not be.
How about the statement of to Germany that they're a prisoner to Russia, and yet they want us to protect them when they're buying all their natural gas from them, and China is threatening last night to retaliate against the U.S. oil industry. This is getting kind of hairy, guys. What do you think?
Yeah.
Listen, having to do with the NATO, Trump has, makes several points. Some of them are 100% valid. Yeah, some of them are 100% valid. The question is, it's one thing to make some points, make some arguments, even push the envelope one way or another, which the U.S. always has the way of doing so. And it's another thing doing it in a manner that alienates you from natural allies. Let's not forget that that Europe as a continent and the vast majority of the countries and the US have been allied since World War II, right? So, it's one thing achieving something and another one achieving something and at the same time alienating your allies as much as possible, especially during a period that we do see a slow but steady shift of the balance of power towards Exactly, towards the Asian continent, right? Towards China mostly. So I really don't understand this kind of an approach. As I said, he makes some valid arguments, and I'm pretty sure that he could achieve things by approaching it a little bit differently, which at the same time wouldn't make him like rude or alienate him from natural, like 7-decade-old allies, right?
Wherever you go, there you are.
So anyhow, we have quite a few things to talk about the markets, because I do think that there are some developments here. Development number one, we were looking at it the day before yesterday. USD Swiss breaking out of the triangle. I mean, it's this setup is very obvious. I would have actually opened the pattern play as well, but Greg beat me to it, so I have no point in having twice the same thing. Obvious impulsive move higher, obvious consolidation, and in this case a triangle, and an obvious breakout. We're currently testing an area of resistance already. Tested it twice before and got rejected. I don't believe that this time we're going to get rejected, but even if we do in the very, very short term, I think that would be a pullback that would be worth buying. So as long as we remain above this broken triangle, I think that buying USD Swiss for another push higher towards at least the next area of resistance, which is at 1.018, so 130 pips higher from here. That's why I said a pullback towards 99.80 parity. So any pullback towards parity, I think it's a good opportunity to buy the pair for 180 pips of upside at the very least. At the same time, the Euro USD is not breaking down because part of the move is due to the Swiss franc, but definitely the fact that the Euro USD got rejected once again from this descending trend line is definitely not a good omen. I think that there is a decent chance that if we make it down to 115 once again, it's not going to hold indefinitely. I mean, it will break for one more push to the downside, which would make sense considering that this is a triangle. So I think that another visit of the 115 area has a high chance that we're going to see a breakdown, in which case I would be looking for a retest of this the previous long-term descending channel, the resistance actually. This time it might act as support. That's roughly at 113 at the moment. So that's what I'm looking for. I'm also monitoring this ascending trend line here in the RSI, which is breaking lower. So I think Euro USD, we need to remain a little bit more patient. Cable looks somewhat better in my eyes, although I do realize that the chances that if the Euro USD actually breaks below that 115 floor, we will probably get the cable breaking below the 130 floor as well. But we still have this breakout from this descending wedge. So if I had to be long one of the two, which I don't want to be long either of the two yet, because for me confirmation would be a daily close above 133, as I had said multiple times for the cable. That never transpired. Intraday we traded above it, but on a daily closing basis we did not. And also a break above that descending trend line in the Euro USD, which never happened, right? So 133 remains key area of resistance for the cable, and unless we break above it, I would remain cautious. You seem to be having fun, Dale.
Stelios was just mentioning your favorite type of medical specialist. That's all.
Yeah, I can do it. I can do it.
We're all a little goofy today. So, Steve, do you think there's a shot the dollar doesn't take out the double top here and fails?
But by the way, useless information of the day. My wife and his wife have the same gynecologist, actually.
That can make them very good friends.
No, he's not a man. She's a woman. Sabine. She's a German woman, actually.
Okay.
Yeah.
So, what do you think? Dollar, if someone put a gun to your head, taking out 95.50 or failing from here?
Listen, I'll tell you, Dale, knowing that Euro USD and the cable constitute the vast majority of the basket. That's the DXY.
Yeah.
I think that DXY is headed higher for now. So I don't mean that it's impossible to see a pullback first. Although, you know, if we break above 95 again, I would expect that pullback might be even more limited.
Yeah.
So, for example, that might end up being a triangle here. So something like this, right? Something like this. So I would say that the dollar looks to me like it wants to, either from here or from a little bit lower, that it wants to push higher at least once again, right? That's what I think. Perhaps towards the 96.50 area. Yeah, that's how it looks to me.
Okay, buddy, thank you.
My pleasure. Now, let me go to a few other major pairs. I agree with Blake. I have several pairs to show actually today. Let me first show USD CAD, because I don't think that the move lower for USD CAD is done. I would want to see one more push lower towards the 130 zone. So although I do agree 100% with Blake that USD CAD I think is headed higher, or anyhow has a decently high chance of headed higher.
You're looking for a C first.
Yes, exactly. I'm looking for a C towards that zone of multiple supports at 130. So I would feel much more better in buying the USD CAD after I see one more leg to the downside than actually doing it right now, right here, right now. Okay. Although I have to respect this huge outside white candle that we got the day before yesterday. As long as we remain below 133, I would like to see one more push to the downside. Then I will feel much more comfortable of being long. At the same time, and you know, if you remember, I warned multiple times about that. USD NOK found support at the 8 area and is moving higher once again. If you remember, I said multiple times that this is a nice head and shoulders formation, but you know, I would still maintain a bullish bias as long as we are above 8, because this does not trigger unless we break below it. So the fact, and I mentioned that the day that we actually tested that and, you know, moved higher, the fact that we actually got a very nice rebound from this area, instead of seeing some follow through and finally a breakdown, is definitely not good. I mean, can it still be a head and shoulders formation? Sure, it can. But, you know, if that's the case, it needs to happen fast. I mean, this can still be part of a right shoulder here, but we would need to see the pair move lower, you know, quite fast before we lose completely symmetry in you know, in this head and shoulders formation. So I do think that as long as we remain above 8, you know, the risks are tilted for one more push higher, and only a break below 8 would actually get me interested in being short. So I do think it's a pair worth monitoring. And, you know, equally important, the same day that actually the USD NOK was rebounding from a possible neckline is the same day that the USD SEK was rebounding from this ascending trend line. I pinpointed to that, and I said that, listen, we're currently at a critical juncture. There are two possibilities here. One, push higher once again. Two, break down. We never broke down from that. We actually held very nicely, and USD SEK seems to be well bid. I do think that, you know, we should see a push towards the confluence of resistances at 910. Now I have to be very honest. 910 looks to me like a very, very interesting area to attempt to be short the USD SEK. Of course, if and only if I see some kind of a nice reversal, some kind of a big candle. But I am closely monitoring this 910 area because technically speaking, it would look beautiful if we got some kind of a rejection from there. I would start building a short position actually. You can see why. You can see that RSI is still diverging. This would be a very nice ascending wedge. So potential short, but definitely not yet, okay, after a new high. Now, let's cover Aussie and Kiwi. I don't think we have much to say, so I'm just going to reiterate what I've said multiple times. I said once we saw an attempt to rebound from the 127.2% extension that, okay, fine, we might get a bounce, but as long as the Aussie remains below the 75-cent area, there is really nothing bullish to talk about. So this remains to be the case. As long as we stay below 75 cents, I maintain a bearish bias, and I have no reason to do otherwise. And I said the exact same thing for the Kiwi, but the equivalent level was the 68.70 area. We didn't make it to that. We actually got rejected from a little bit lower, and it is what it is. We are pushing lower once again. Let me zoom out so you can see the importance. There is a descending trend line support here. This has been tested once, twice, 3, 4 times with the previous rejection. Obviously, if we break below it, I think that we should extend to a nice confluence of supports at the 65-cent area. So I think that as long as we remain below 69.50, that high that we got there, 69.50 to 69.70, we can be looking for a test of the 65-cent area. So that covers that as well. Let's have a look at the USD yen. Let me briefly say here, obviously, the break higher, and we had warned in advance, constitutes an important, breakout. From this point on, any pullback towards this confluence of supports now, it used to be confluence of resistances at 111.50, should be considered like a nice opportunity to be long. Next target would be that high at 114.70. Okay, so I do believe that I don't have any reason to believe, let me say it oppositely, that this is a false breakout, and I would respect any pullback to 111.50. I think should be considered a buying opportunity. Now, once again, I've actually stressed out my reservations that there is still a chance that we're seeing what we saw in the summer 2015, and perhaps the market, by moving closer and closer to the all-time high, is going to trap people being bullish again and then give us one more sharp leg lower. But that doesn't mean that I have any reason other than that. I mean, other than the historical example of 2015 and how exactly the corrective move lower unfolded then, I don't have any other reason to be bearish. And, I take it one level at a time. I mentioned multiple times that 2690 was a strong area of support, and only if we broke below it, I would become bearish. That actually held. We were then monitoring this descending trend line. We broke above it. So now we are above this previous high, and we're testing that high, the March high. So I have to say that, being cautiously bullish makes 100% sense. I mean, I don't think.
When you say, Steve, that all the bears are gone now that we've taken out that first rebound high, just a shade above 28, I always felt it was kind of like the grand prize to shake out bears, that they would have, they'll be capitulating over 2,800. And then next time back under 2,800, maybe you have something.
Let me answer that question for you. Give me a second. I'll show you. S&P 70. The DSI is at 70. That's not an extreme reading in any kind of way, right?
Have you seen them at 90, like in January? Was it 90 before the big break?
96, something uber extreme. Yeah, 95, 94, 96, something more than extreme. I mean, it was something.
I remember it was above 90 for quite a few sessions in a row.
Yeah. And volatility, and the DSI on the VIX was hitting some ridiculous numbers as well, like 5, 6 years, something like that. Indeed.
Quite a difference.
Oh yeah.
Okay.
A huge
All right.
difference. So I think that participants are still decently cautious Dale. I mean, I'm not saying that we're not seeing obviously a pickup in bullish sentiment, but I'm not seeing any extremes. You know what I mean?
Mm-hmm.
So I don't think that sentiment and positioning are yet like big obstacles in seeing further upside. That's my point of view.
Okay.
Now, I want to mention metals. And if you remember, I had mentioned the previous days the fact that gold, I've mentioned it several times during the past 2 weeks, actually, the fact that gold is trading oppositely to real yields, which is unprecedented. You know, equivalent to real yields, for those that know, are, you know, I mean, an equivalent reading, because they're, you know, they're absolutely correlated with that, are TIPS. For those of you that don't know, TIPS are Treasury inflation protected securities, right, Stelio? They actually fluctuate. They are bonds that are protected for inflation.
Yes.
So in essence, they're a good depiction of real rates. Correct, Stelio?
Correct. Yes.
They move,
Yes.
yeah. So look at this chart here. This is gold with TIPS. Do you see this insane divergence?
Yeah, you would think there'd be some regression soon.
Yeah. I mean, something has to give here. Something has to give. I mean, let me explain the reason why gold is moving along with, always moving along with real rates, is the fact that real rates are the opportunity cost of holding gold. Because what's the negative? What's the problem? Yeah, what's the problem with holding gold? No yield. So it becomes more and more of a problem the higher real yields are. And for those that don't know, real yields, what are they? They are nominal yields minus inflation, because inflation actually erodes the nominal return, right? So usually when real rates are going down, obviously gold is going up, and, you know, oppositely for obvious reasons, because, you know, there is less of an opportunity cost in holding gold. But now we're seeing like this big divergence, and I don't know for how long it can go on. I mean, this is a relationship that's been true, you know, almost forever. So I have to stress that out, but that doesn't change the fact that the metals are actually in a very, very bad spot, and they are breaking down. Because let's have a look at gold.
Steve, before you continue, just one note. I personally disagree with this. I think that this thing that you said, and a lot of people say about gold having no yield, it's correct for the short term. In the medium term or the long term, if you have inflation, gold, because it's a finite asset, is going to follow. End of story. In the short term, obviously, if real rates are going high, then gold will underperform. But I think that's you know, people just keep saying, oh, it has no yield, it has no yield. Yes, but it is. Historically, it's been an inflation hedge, and it will continue to be so.
I agree with you. I believe in gold. There's no question about it. But you know, theoretically speaking, it has no yield, right? I mean, yeah.
But so, it's like saying, it's like saying you have a Picasso. It has no yield, but as money supply grows, its value grows.
Of course, its value will grow exponentially. Exactly, but this is still not a yield. I agree with you. The value of the commodity will tend to go higher, and, you know, historically it has tended to do so. And of course, there are periods that this is not happening. But after big periods of consolidation, gold will keep breaking higher as long as we follow this kind of monetary policies that we do. I mean, yesterday I was seeing once again a cumulative chart of a chart of cumulative inflation since the 50s, and prices have gone up since the 1950s by 1,070%, right? And keep in mind that that's based only on the reported inflation. But even if we take that into account as being 100% accurate, right, it makes you think, right? It makes you think. And we're now entering a period. Today we got Spanish CPI. Did you see the print, Stelio?
Actually, I didn't.
2.3%. I mean, we've started silently going again in a period that, theoretically speaking, we have all central banks having like inflation targets of below or 2%, and in the case of the US, that they try to water down the target every now and then, to fit, whatever they want to do, which we all know what it is. Now they're talking about symmetrical target, but still the symmetrical target is the 2%. We're now seeing across the Western world CPI prints over 2%, and nobody seems to care about it. And the tendency is for it to move higher. And we all know the big flaws in calculating that CPI as well. I mean, when they say 2.3%, allow me to believe, and I think that everybody that lives out there knows that it's not
double that. Yeah, it's double that. Yeah.
It's double that. Exactly. Because this is the only way, the only way for debts, these kind of debts that we have accumulated, to be somewhat manageable, is to inflate them away, right? To devalue the real, the real cost of the loan or whatever. So in essence, when you pay it back, you pay back the same nominal value, but in essence, that's
Yeah, it's only a fraction of what it was initially. For me personally, just to close out on the precious metal thing, I've said this many times. I'll say it again. For me, because I look at these things in the long term, like I don't trade for a day or a month. I look at three things. One is the use of the metal, like gold and silver. You see platinum, it had a dip because catalytic converters are used less and less. Okay, so I look at the actual use, and is that changing? Gold or silver is not. And then the other thing I look at is, obviously, if there is a way that they eventually find to manufacture it, then you have a big problem. Okay, but the moment, no, it's just being mined. But for me, number one is supply of money and credit. That's it. That's what I look at. As long as we're living in a world of big deficits in all the major countries, I don't care. These things are going to the moon eventually. Short term, there's going to be a lot of things influencing them, like real rates, like you said, and a lot of things.
And let's add to that we're living in a period of big and growing deficits in the 9th year of the recovery. So what's going to happen with those deficits? And debts when we actually have to fight the next global recession, and one way or another the central banks will have to be a lot more accommodative once again. They might literally implode, right? Literally.
Fiscal policy of most Western countries is just horrible. So, I look at these things, and there's no way I can be bearish on metals. Okay, short term, they might go, they move quite violently as well. And we all know about, paper, futures contracts and all that have nothing to do with physical. They can move the price around as they wish. But in the medium term, I see no reason to be bearish metals. End of story. You can make money being short, but I just could never sell it. I really could never sell them.
Me too.
My humble opinion. Okay.
No, me too. I'm of the same opinion as you. I mean, I do see technically, and I do respect the technicals, and they are on the precipice of breaking down, which I do think that they're going to produce some downside follow through. But I'd rather trade them only when everything points to higher prices than the opposite, because I would really not want to be holding the bag. You know what I mean?
You guys, do you see any potential turn in the yen? Because I think that's going to be a piece of the puzzle to get some type of lift out of precious metals. And why is the yen weakening? This type of move.
As I said before, Dale, I think that the breakout we're seeing in the USD yen is actually to be respected. It's actually to be respected. I mean, I think that it would be a mistake. From a statistical perspective, I think it would be a mistake trying to fade it as a false breakout, because we have absolutely no reason to believe that it's a false breakout, right?
Yeah. I'm kind of surprised the yields aren't going up faster with the strength of US dollar yen. Aren't you?
Not really, because the USD yen has turned out to be, during the past few months, like it has a mind of its own.
A life of its own, yeah.
Yeah, a life of its own. I mean, it has decoupled. We've seen very often how much it has decoupled from risk.
It moved out and got its own apartment already.
Yeah, exactly. It's growing.
I
New girlfriend, etc.
I think it's a studio, but anyway.
You know, guys. Sorry to interrupt. I personally want to short the dollar yen, but I will not touch it until it gets like 118 to 120. That's where I'm really going to get interested. If it gets there, okay. But like Steve said, small has to be respected.
Next target is 114.70 to begin with, but yeah, it can extend more than that. Anyhow, let me go briefly through metals and crude because we have a question for that as well. So
no guests today.
No guest. Okay. So one, third retest of these lows today, and still holding this ascending trend line. You can see it here.
Two drives.
Yeah. So now somebody can easily say here that okay, it's holding, right? I mean, it's holding. Yeah, it is holding, but look how heavy it looks. I mean, I said the other day when we were testing this 1260 area, I said that listen, unless we close on a daily basis above 1260, you have no reason to be bullish. And we got rejected from there, and now we are struggling to hold this 1237 area. Personally, from the way I see it trade, I wouldn't bet much that it will hold this 1237 area. So it looks to me like it wants to break lower. Silver struggling to hold this 1570 area after coming back and retesting the broken triangles support as resistance. Doesn't look good either. You can see that if we actually break below there, then things start to get even more hairy. I mean, it opens a lot more downside. Palladium is also breaking out. Let me show you. There it is. Palladium also breaking down from a pennant or a triangle, depends on how you want to draw it. And it's breaking down below this ascending trend line as well. Doesn't look good. I think we're headed to 900 and we take it from there. Platinum had a very nice rebound, but came back, retested that broken wedge as resistance, moving lower once again. It looks seriously compromised, right? Just look at this. Next target is going to be that low that we had in the end of 2015, above $800. Bottom line, metals don't look good any way you slice it. Crude?
Steve, can I correct something? I just realized I said earlier about palladium being used in catalytic converters. It's obviously platinum, not the palladium. But anyway, just wanted to correct that.
Platinum, you said.
Oh, I said platinum. I thought I said palladium. Okay, fine. It's platinum anyway.
Yeah. Crude. Now, crude had a very big day to the downside. Yesterday, it gave us a spinning top, which is obviously, a consolidation candle. So far today, we have an inside hammer, might end up being a spinning top as well, or a doji or whatever. Obviously, these are not signs on the daily chart that crude is about to rebound, right? If anything, if we go down to a 4-hour chart and we have a look at it, you can see that this is likely some kind of a triangle. So I think that crude should have one more leg to the downside at the very least, right? It looks very heavy for now. So I don't think crude is done pushing lower, right? There it is. Okay, so I do think there is more downside left. Copper. Oh yeah, I forgot to mention copper. Thank you for reminding me. We have a question about it. So let's go back to the daily chart and let's have a look at copper. Copper rebounding and holding this confluence of supports at 270 something. But in all honesty, I think that as long as we remain above this broken area of support resistance at 294, copper should produce more downside. Anyhow, the double top target is at 256. So I would be looking for more downside. Now, if we are to get a little bit of a rebound first, okay, not unlikely. I mean, it's battered down, it's beaten down so badly, it's oversold very much in the short term. So sure, it can produce some kind of a rebound, but as long as we remain below 294, I would be looking for a continuation of the move lower. DAX, sure. Let's have a look at the DAX. Here's the DAX. Nice rebound from a confluence of supports, but also a nice rejection from the 12,600 area. I think that as long as we remain below that, which was like a double top target, the floor of a double top, we need to remain cautious. So we're now oscillating below, between 12,400 and 12,600, both of them areas of support and resistance in the past. I think that whichever gives, we're going to see an extension. I wouldn't, I wouldn't find it impossible to see one more leg lower here. I would actually find it decently probable. If we break above 12,600, there's a triple confluence of resistances that worries me a little bit at 12,760. Why? Because that's the 61.8 of the move lower. It's also the 200 DMA and the 50 DMA. So I would still be cautious on a breakout above 12,600 until we clear that zone, because that is quite an important zone as well. So I need to see more to be persuaded that the correction lower is done. On the other hand, the FTSE looks closer to a potential bullish breakout, right? The only thing it now needs to do is clear above this descending channel, this bull flag in essence, for me to turn bullish. Otherwise, a rejection could bring it down towards this channel support once again before higher. But I do think that the move that started in March and topped out at a new all-time high in the end of May looks impulsive. So sooner or later, I would expect that the FTSE is going to actually take us to new highs. I think as a bullish setup, it looks better than anything else at the moment. And this is Nikkei as well, pushing higher. As always, I have to say here, 23,000, a very, very, very strong area of resistance. Only a break above 23,000 would make me comfortable looking higher once again. Okay. Last quarter of the year, pound yen. Sure, let's have a look at it. Here it is. Important area here in the pound yen. You can see why I don't need to say much more. Because this is a very important trend line support broken, and it acted as a resistance already once. When we were down here, I said that another push higher towards that trend line to retest it is likely before getting rejected. And actually yesterday, that was the high. The retest of that trend line was the high, and we're pulling back. Obviously, I would want to see this support area at 147.50 break to the downside to feel more confident that this rejection yesterday was actually the real deal. But as long as this area is holding, I would not be trading it to the upside. Okay, I would still be looking lower. My pleasure, Nick. Hello all, I came in late. Did you guys discuss the USDTRY? No, we didn't actually, but I have no problem having a look at it for you. And here it is. Broke out of the triangle, consolidating a big spinning top yesterday. I don't know what to tell you. I told you, keep looking higher. In all honesty, there is nothing bullish, nothing bearish to the pair, nothing bullish for the Turkish lira. Okay, broken triangle, yesterday new highs, almost touched the 5 area. I don't think we have any reason yet to be looking for a strengthening in the Turkish lira. So a weakening of the USDTRY, I think we should be still looking higher. And if you want me to have a look at it against the euro, new all-time highs there as well. That was also a triangle. I haven't updated this chart obviously in some time, but also a triangle, also breaking out of a triangle there, also pushing to new highs above 580. So, as you see, Same kind of deal here. Last time we looked at it, we were there, and I was pointing to more gains. They actually did happen. Just look at this. Just look at this. It's just parabolic, right? At some point, it's going to snap back, but technically and fundamentally speaking, there is still no indication whatsoever that that is about to happen, right? Now, the area...
Erdogan made his maid Secretary of State today.
I wouldn't consider it impossible, to be honest.
Yeah, and his nephew is Secretary of Defense now. So the whole family's in there. What's that remind you of?
I wouldn't consider it impossible.
Midnight Express.
Anyhow, so I think we covered more or less, every question. Everybody have a lovely weekend, and we'll be back here on Monday and enjoy the World Cup final on Sunday. Somebody has to do so. I'm going to be baptizing.
Oh yeah, record it. Record it.
It's
and have no one tell you. No one can tell you the outcome. Huh?
We don't live in the 1880s, unfortunately. We live in 2018.
Anyway, Steve and Stel, great job this week, guys. And if you guys enjoy these space webinars, besides my sense of humor and personality, the way to say thank you for these free webinars is to become part of our trading family and have somewhere to go after FACE in the private chat room. So if you want to say thank you and show your appreciation of what FACE has done for you for a year and a half or more, sign up. And, Fridays are a good time to do it because by Monday, you'll be able to navigate the site like a champion. So that's it for me, guys. Have a great weekend. Recharge your battery, do your work, listen to Blake's look at the week ahead so you're prepared to act instead of trading on the fly. Impulse trading, I call it, and people call it. And thank you for hanging out with us all week. So you're welcome, Nick, Marius, Kareem, Martin, my trading warrior brothers and sisters. Most of all, remember, don't just count your pips, count your blessings. The ForexAnalytix team, the dream team, God willing, we'll be back with you Monday early. So have a great weekend. Go Croatia. I only pull for the underdog because I'm one. Okay, I'm an everyman. So go Croatia. Anyone with me? Or you are? Okay, instead of the French, which I'm not going to say that they could be snobby. Maybe a little humility for the French this weekend. Okay, adios. Enjoy the game. See you guys Monday. Thank you, everyone.